Hey traders, it's Rick from Trade90X, and I've been asked to put together a video, and I'm excited about this Trade90X Get Trade Fit 90 Days kind of lesson review on our Trade90X for context situation trading strategy that we use for fast swing trades on our 15 and 60 minute, or 15 and 60 minute we use as our anchor chart down to our 1 to 5 minute. Today I'm going to review what our Trade90X for context and situation strategy is. So what I'm going to do is I'm going to go through this worksheet, and then we're going to go right to the chart. So again, in any process we do, I don't care what strategy it is, again, you have to back test by symbol and time frame at least 50 to 100 trades. Why? Because as I talk about it all the time, you need to have a body of work to see, number one, do you understand how the market works? Do you understand how the process works? Are you understanding how to enter, and the order flow, and with your brokerage firm? And most importantly, do you understand the statistical edge? Again, if you don't understand your numbers and have a statistical edge with any process, you're setting yourself up for failure. You must have a replicable and scalable business, and the only way to do it is to back test until it becomes second nature. And do you have a statistical edge over a body of work that you know with confidence that in the long run you're going to make money? Does that make sense? Good. So if you have a clear understanding of your numbers, then you can start moving on and start trading live. Again, part of that process is your risk and money management. I just want to get it right out of the way. We don't ever risk more than 1% of a trade. Now, I understand sometimes you have to go to 2% if you have a smaller account, but here at Trade90X, we're usually a 0.5% to 1%. And again, it's about capital preservation. We never risk more than 5% of capital any one trading session, and we don't take trades unless we have a minimum of 2 to 1 to target one. And also, which I didn't mention here, you must have profit and loss targets daily. This is when, again, you've, hit your profit and loss targets each day. And I also recommend, if you have 2 or 3 trades in a row you lose, that's it. I don't care. You don't need to reach the 5%. If you took 3 trades in a row, you risked 1% and they were all losers, that's it. You stop, you go, you reevaluate, you journal, and you get ready for the next day. Are we clear? Same thing on the profit side. Once you hit your profit, typically, if I hit my 2 to 1 target the first time, I'm done, because the more you trade, the more the probability you're just going to give it back. Are we clear? Good. I also want to check also if we have news, yes or no. Is there any important news? And I'm also going to, put in earnings, because earnings, yes, no, because if you have, things like Apple or, Disney or Amazon, Google, these can have an effect on the market. So again, we don't trade into news or earnings. I have no interest in that. We let the news come out. Remember, if you hear me doing my videos every morning, if you're new, welcome. It's about market context, who has control, is it obvious, okay, and where are the decision points we want to trade. And when price comes to those decision points and we get our confirmation, we're ready to go. Now, again, if we have news or earnings during that period, we let it settle for about 10 or 15 minutes, then we make our move. Then you have to determine what session are you trading? Are you trading the Asian, London, or New York? Here at Trade90X, we trade the New York session. All right. And the New York session usually electronically starts at 8 o'clock. The US, the actual official, is 9:30, but typically our sweet spot for our for context situation trading is going to be to 8 a.m. to 11:30, the European close. Okay. Sometimes we will look at the last hour of the market, but typically 8 a.m. to 11:30 is our sweet spot. And again, we have, again, when we look at market context, remember, markets can only be bullish, bearish, or range. You need to be able to understand what a bullish market looks like, a bearish market, and a ranging market. And I'll show you that when we get to the charts. Next, we ask the question, where is price in relationship to the previous day's range? Okay, this is what I love about this process. And if you've been watching my videos in the morning, I talk about it every morning. Again, above or below the previous day's range, if price is making clear, obvious trend, higher highs, higher lows, above the previous day's range high, or clear lower highs, lower lows, below the previous day's range low, that is a trending market. We're looking for continuation trades. And in this, and I'll talk about the context in a minute, but that's quickly tells you, is the market bullish or bearish? If price is inside the previous day's range, we know it's a neutral day. Okay, that's what I love about this for context situation strategy. It quickly tells you what type of day you're trading, and then the context 1, 2, 3, and 4. These are our quick setups. All right. Then you have to ask yourself, do you fully understand the context situations and setups? Okay, is markets trending? Is it a reversal trade? Is price in a range? Now, the charts typically we use for our four context situation strategy is a 60-minute, 15, and then anywhere down to a 1 to 5 minute. Now, it doesn't matter. You can use range charts, tick, Renko. It doesn't matter. If you don't understand the context and what it means, it doesn't matter what type of candles you use. Okay, first thing we're going to do also is we're going to squeeze the 60-minute. When I go to the live charts, I'll show you. And what I'm looking for is to identify, is price action, order flow. Is it in an expansion phase or consolidation? Okay, expansion is a range, consolidation is a range, expansion means we're now trending. Okay, and that's what price does. It goes from expansion to consolidation, back to expansion, until we have some type of reversal. All right, now, before I get to the context 1, 2, 3, and 4, let me just, the tools that we use and odds enhancers, and then we'll get to the charts. So the tools we use, and again, this handout, this will be, downloadable for everybody that, is interested in this context, for context situation strategy. I highly recommend you back test it, journal it, and use it, because it's phenomenal. Now, one of the things I want to put in odds enhancer is our routines. Okay, our pre, live, post, weekly, monthly. All right, so tools we use. So the tools we're going to use, and again, I'll show you when we get to the charts, it's going to be the previous day's high, low, close, and midpoint. Today's open, overnight, and USA, weekly, monthly, yearly high lows, and Camarilla pivots. And then when I get to the charts, I'll show you what it all means. Odds enhancers are routines. Our pre-market, this is where we do our breakdown. This is where we identify our trade plan. Live market is for execution. Post-market is for review and journaling. And then weekly, monthly, and then let's also say yearly is to, again, review, our daily, charts, see how we did for the week, the month, the year, did we hit our goals or not? Again, I talked about this, squeezing up the 60-minute chart, which I'll show you. And then again, identifying, time of day, overnight high, low. If there's an overnight high low in the Asian and London session, I want to add those. Again, bullish, bearish, or price action. Is price obvious? Okay. Is the setup obvious? Following our back-tested plan and numbers, mastering the setups, trading with momentum. Bullish trades, we want to have support. The bullish candles we look for at support: green engulfing, green pin bar, green inside doji candles. Bearish trades off resistance, at resistance. So let me just say at. And bearish trades at resistance, we look at red shooting stars, red engulfing, red and dojis. And asset classes we're usually trading, we typically trade here, Trade90X, we trade futures contracts or option contracts. Okay, now if you have a $10,000 account, I recommend options, full size futures. If you have anything less, or 5,000 and less, I recommend mini futures contracts. Okay, and I'll be doing some more, specifically on that. But today we're just talking about the Trade90X for context situation, trade strategy. And always, if you don't understand anything after this video, you hit us up at hello@trade90x.com. Now, before we get to the charts, let me just so there's context 1, 2, 3, and 4. Okay, first thing we do when we come in, okay, we ask where is price in relationship to the previous day's range? Above or below tells us potentially bullish or bearish. Inside is neutral. Okay, context 1 is basically price is above or below the previous day's range. Only context number 1 will we consider swing trades. Okay, if price is putting in obvious higher highs, higher lows above the previous day's high, or obvious lower highs, lower lows below the previous day's range low, we'll look for continuation trades that support for bullish trades, resistance for bearish trades. Now, if price above or below the previous day's range, and in your plan, you're not a swing trade, just a day trade, then you just day trade it and you're flat once you hit your targets. Context number 2, this is where quickly price is inside the previous day's range. This tells us price is neutral. Highest probability trades are going to be the top third and bottom third. And again, I'll review the charts in a minute. Context number 3, this is when price we're looking at and we get obvious fake out breakouts at the previous day's range high and low. We're looking for multiple rejection patterns, typically M and W patterns. And context number 4, we cannot figure out what price action is doing. We cannot figure out the price action. There's no edge. When we see tight range candles or oversized volatility candles, we do nothing. Okay, so let me just change that right here. We do nothing. We wait. When we are in context number 4, you wait for context number 1, 2, or 3 to set up, or find another symbol you trade that has clear and obvious context 1, 2, or 3. Okay. All right, and then this is why we backtest and journal until this becomes second nature. So I always say in every video, the most important thing for us is our backtests, our routines, our journals, and then the journal and the backtesting doesn't lie. Okay, if you do it properly, it doesn't lie. Okay, so we've talked about some of the things that are key with the 4 context situation. We've talked about what context 1, 2, 3, and 4 is. The tools that we're using now, brokerage firms that we use, charts, we use TradingView. Brokerage, we use Thinkorswim, Tastyworks, and NinjaTrader. That's our preferred brokers for options and futures. Okay, trading this. And again, I went through the odds enhancers, the asset classes. Now let's go to the charts. Okay, so I'm going to dump that. So here I have a 1 hour and a 10-minute. And first thing we do is, now the ES is one of our main go-to symbols, but so we're opportunistic traders here at Trade90X. We typically trade the indices, ES, NQ, YM, RTY. We'll trade a little bit of oil, a little bit of gold, maybe a little Apple, and maybe sometimes the euro. What I'm looking for is in the morning, I quickly scan. So let me show you again what that looks like. So remember what I talked about here. So here's your previous day's high. Here's your previous day's low. The red is your midpoint. This is your open and opening range. Okay. The weekly is going to be in purple, your high low. The orange is your monthly high low. And the yearly is right here, the high. And also, we have the previous day's close, the dotted line. So what I'm trying to establish every morning when we come in, I'm going to look at, say, 5 or 10 symbols, and I'm going to ask the same questions I do every morning. Which one of these symbols that I'm looking at gives me the greatest edge? Now, I will tell you that context number 1, again, remember, is price above or below the previous day's range. And above, it's making clear higher highs, higher lows, and we're looking for some kind of pullback to support to go long. If we're below the previous day's range low, I'm looking for lower highs, lower lows at some kind of pullback to resistance. Okay, that it has to be obvious. Number 2, if price is inside the previous day's range, I'm looking at the top thirds and bottom third. My favorite trades are going to be bottom third for longs if we get bullish price action. Top third is going to be bearish if we get bearish action. Now, remember, I'm going to say this once about ranges. I don't care if I'm on a 1 minute or monthly, my strategy is the same. If I'm in the middle right here, the only way I will ever trade the middle is if we have a very wide range, previous day's range, and we have space of 2 to 1 to the top or bottom. If we do not have space of 2 to 1 to target 1 to the top or bottom of the previous day's range, I have no interest. In the middle, I don't care if I'm on a 1 minute or monthly, I'm always automatically going to go half size. Are we clear? Why? Because the middle of a range is always, always, always choppy. Okay? Now, the reason I use all these levels, the previous day's high, low, midpoint, the opening range, previous day's close, weekly, monthly, yearly high, and the Camarilla pivots. Why? Because they're predictive, not lagging. They quickly tell me the story. Are we bullish, bearish, or neutral? Now, how I use the Camarilla pivots, they're secondary, meaning that R3, S3, and the pivot, it's kind of our neutral area. Above R3 is bullish, below S3 is bearish. Now, S4 is going to be the breakout pivot to the downside. R4 is the breakout pivot above. But the most important thing, I don't care, is what is price doing in relationship to the previous day's range, above, below, or inside. So again, number 1 is above or below. Number 2, top third, bottom third. Number 3 is going to be what we call the fake out breakout at the previous day's highs, lows. And what I really love is when we have confluence. When you see how right here, previous day's range, low, we have a weekly and an S4. You have 3 levels right there. You see on the top right here, we have an R4 right here. Beautiful. So now let's go through the symbols and let's go through. So the first thing I always do is I go to the 60-minute, I squeeze it up. And what I want to understand is what is the price action in the bigger picture. So I can see we're basically in a range. Okay. We're basically in a range. So, I can see this area right here. Oops, I can see this area right here. So for me, this zone right here, until we break above or below, okay? Now, one other thing that I do is I do go to the weekly chart typically, and what I want to just see is what is the bigger picture, and are there any levels that will be important? Because remember, or anything from a daily, weekly, and monthly are going to be what the smart money follow. Meaning smart money, when you hear that term, it's just banks, hedge funds, institutions. They are what controls the market. Now, if you look here, the S&P has been 4,200 down to 3,800. Until we break above or below, we're not sure yet what's happening. So now I'll bring this back to a 1 hour. Okay, right here. And now you see how I've got the bigger red lines right there? Good. That means that until we really break above or below that, we're in this range, but we've got to respect these bigger levels. All right. So now I've got this here. Now, okay, so I don't necessarily need those, but again, I just want to understand, are we in a range? Are we in expansion or consolidation? And for me, in the bigger picture right now, we're in this consolidation area right here. Okay. But you see how this is the monthly, this is the weekly. So I know these are key level. This is the yearly. So if we break below the weekly, I'm looking down at the monthly. If we break down the monthly, I could be looking all the way down at the yearly. Okay. But until we test those levels, I need to understand by squeezing the chart. Now you see this line right here? This is the weekly start right here. And what I'll do is I'll also look at the weekly. As soon as we put in a high, now I don't know this is the high, but I'll put in this, like the Monday here. Here's Monday, Tuesday, Wednesday. So what I'm going to do is usually after Tuesday, where is the high and the low right here? And I'll put that in. And, it's amazing how, again, when you start backtesting journal, you start noticing these things. So now I've got my daily levels. I've got my monthly, I've got my weekly, and I've got the weekly high-low. I know where the week starts. So now that's our 60-minute. I keep that up right there. Now, if you want to move this down to, after you do this, if you want to move to a 30-minute to see a little more structure, I have no problem with that. Now I see my levels right here. I know what's important, but the most important thing is right first is where is price in relation to the previous day's range when you came in. And sorry, I'm taking so long on this one. We'll go faster as we do some other symbols. So when you came in right here, now I trade again, I start at 8 o'clock. That's when the electronic market starts. US, it starts at 8 and then 9:30 is the official open. So for me, and our sweet spot typically is 8 to about 11:30, the European close. All right, so I'll just put that in right there. And I'll bring this down to a 5-minute. And I'll usually use, remember, always have your anchor chart, 15-minute to 60-minute, so you can always never get lost in the forest. Too many traders they get lost in the forest by using a small thing. I told you, I need to understand the context at all time. Where is price in relation to the previous day's range? If we're above or below, where are our weekly, monthly, and yearly levels, or these levels I just put in from the week, and then also those bigger levels I got from the daily, monthly, weekly. Are we clear on that? Now, remember, this takes a little time, but once you get it, I'm telling you, it's such a powerful thing because it's so black and white. So remember, we only have context 1, 2, 3, and 4. So when we came in right here, we were in context number 2. Here was the 8 o'clock right here. Now, S3, R3, we were in a range. So when you're inside the range, remember, I told you, top third, bottom third, or fake out breakouts were our favorite trades until price can prove above or below. I don't really like trading in the middle, me personally, okay? If that fits your plan, go for it. So here, for me, you had 2 bottom third trades right here to go long. And you see, this was the recent high right here of the session. Until we break out of that, you have to expect that you're going to get some resistance here. So as long as that's 2 to 1, I have no problem with those trades. And you can see we were basically in a range from the Asian, London, and the US session. Okay, we never really broke out of this overnight level. But one thing that was interesting to me is you had a lot of trades here. Again, I don't want to trade the middle. But again, if you wanted to trade this, I get it. But for me, the best trades right here, the overnight were here. And then here was the best trade right here. We had a rejection of the previous day's low, and then look at the fake out breakout. You see how the wick comes below the previous day's range lows, and now you've got the weekly and you've got the S4 right there. To me, this was the best trade of the session right here. I mean, these are my favorites. When you can get the fake out breakouts with confluence levels. Now, the stops, I use an ATR stop or structured stop. So the structured stop is going to be below these 2 levels, and looking left, I don't see anything else in the way. Entry right above, and then I'm looking at 2 to 1 right here, and we've got space to the recent high. So there you go. So for me, now I understand, like I said, if you don't mind trading the middle down to the bottom, the one try, 2 try, no problem. You had multiple rejections, so this was a good short. But overnight, you had 2 S3 longs. You had again, within our window of 8 a.m. to 11:30, you had 1 or 2 shorts down to the bottom. And if you stayed patient, okay, for me, in the bottom third, you had these 2 longs right here. And this one as well, I would, no problem. I'll take either one of these right here. Now, this one didn't quite give you the 2 to 1 like this one did, but either one of those were decent setups, and we couldn't get past this area. Okay, so that was the ES. Let's go look at NQ. We're going to go look. So let me just break this up here. So again, what I'm going to do with NQ, I'm going to squeeze the chart. Let me go to the 60 minutes so I can see a better thing. And again, you see how consolidation, expansion, consolidation. So you can see just by looking at it, you got, we have these monthly, week levels, but you can just eyeball it right here, right. And listen, if we can't break out above here or above there, nothing. But one thing I'll tell you, I go to the weekly chart as well. And I just want to see the areas of interest. So I'll put those red lines in here. So immediately right here, and then we also have one here, right here. So if we break above this, we could go up here. If we fail here, we could rotate all the way back down. And then I go back to my 1 hour. Okay, right there. I've got the bigger levels in. I've got the smaller levels. So now I've got my anchor chart. Again, if you want to go down to the 30-minute, there you go. So now, when we came in, where was price? Previous day's high, low, midpoint. Okay, same thing as the S&P. We were in a range. Where is the 8 o'clock? Is the opening of the electronic. Remember, 9:30 is the official US Open. And then I'm going to put in right here, 11:30. Right there. Let me go to the 5-minute. There you go. So when we came in right here at 8 o'clock, what was going on? We were in a range. This was basically the high right here. Now we're coming in here to the bottom third. One try right here. I have no problem with this long right here, back up here. But as soon as we failed right there, you knew that that was a problem area. And then here for me was the best trade right here. Now, this is a little bit, either this trade or this trade right here. This is a little bit more aggressive because we hit a weekly and an S4 and we rejected. Now, if you want to wait and say, no, you know what, I'm going to wait for the price to come back in and reject. And what did it do? Momentum came back in, nice little doji and engulfing candle right there, right at the previous day's range low. So these were the two trades for me. If you were trading inside the US 930, if you at 8 o'clock, this was also, so you had 1, 2, 3 trades right there for me trading. Now this one, again, this will be, this one went below the previous day's range. So we thought we might have a context one, but it didn't. So what I call this is a fake out breakout. It comes back in, doesn't put in those lower highs, lower lows, and then immediately snaps back. I call that the fake out breakout. And then you had the fake out breakout entry right there, context number 3. So we started off context number 2. Now this is what I would call context number 4. So you had context 2 and 4. 2 is inside the previous day's range. Context 4 is when we can't figure out, we don't have an edge. So right there, it's context 2 and 4. Then we came into the bottom third and we rejected the previous day's range low and the S3. Beautiful long. And then here, this is a little bit more aggressive, but when we have multiple levels and that type of rejection, I am definitely willing to take the risk. Now, what I suggest is this: until you have 3 to 6 months of proven consistency, you keep to the exact rules. You also never take a trade that's less than 2 to 1. You never risk more than 1%, maybe 2 if you have to, and you never risk more than 5%. And you have defined profit and loss numbers that you shut down the computer. Now, so this turned out to be a fake out breakout, context number 3. Price started off in context number 2, context 4, context number 3, and then this became the fake out breakout, context number 3. Those are the best 2 trades. So the key is can you wait for the A trade? So what I usually do is I'll usually scan the symbols in the morning and I'll see where has the best setup. Okay, let's go look at the Dow. This video is going to be a little bit longer. I want to make sure you get it. So first thing I'm going to do, I'm going to squeeze the chart and I'm going to look and see again all the indices, basically consolidation, expansion, consolidation. I'm going to go to that 1 week. I just want to see if there's where those big levels are. I'll do them in red right here. So there's a level. Just the immediate right there. So until we really break out above and below, I'll go back to my 1 hour or a 30-minute. Okay, there we go. I have the bigger levels in. I've got my previous day's high low. I've got my weekly. I've got my monthly. Okay. And you can see. So now, what was price doing when you came in? So let me just mark off 8 o'clock. Where's 8 o'clock? 8 o'clock is the electronic market. So again, like the other indices, we started inside the previous day's range as a range. We had context number 2 inside the range telling us it's neutral. Then this is context number 4. We have no edge. Remember, tight ranges or high volatility candles. We don't do anything when we see this type of price action until context 1, 2, 3 sets up, or we go to another symbol that's in setup mode for context 1, 2, 3, or we clear. Great. So here in the pre-market, you definitely had this setup right here. We hit S3, but maybe it doesn't look like we have 2 to 1. Now you see all this, these big choppy candles like that. This I would not. This is not as clear. Now this one is not bad right here. Actually, I'll take that back. This one right here, 1 try, 2 try, shooting star at R3 to a fade back there, and actually here, I'm okay with this. You're in that bottom third at the weekly and previous day's range low, and you get multiple doji pin bars. So, but I like this one really. This, if you're going to trade this one, this was in the top third. It had an R3 support. You had multiple shooting stars. I like the short right there. Context number 2, top 3 short. Let's go look at the Russell. And again, I don't care what you trade, Apple, futures, Forex, crypto, it doesn't matter. And I'll show you a few of those. So the same thing here, I go to the Russell, what's going on in the 30, 60 minute, and we can see we're in consolidation. We're in this consolidation. Let me go to the weekly. I just want to see, where we're at. And I can see we've got a, big bunching of right here. And again, I just always want to know where those bigger candles are. So let me put that in. So I got the low. And let me just make this right here. There we go. All right. So now I go back to my, 30 minute. I've got my bigger levels in. I've got my previous day's range. I've got my weeklies. I've got my monthlies. Great. Now I've got my anchor chart so I can see everything that's going on the left. Now, when we came in right here, again, I'll start at 8 o'clock. The electronic session right there. Beautiful. So again, what was price doing? We had context number 2, context number 4. Context number 2, inside the previous day's range, we're neutral. Context number 4, price action, no edge, not sure what to do. We got to wait until we get a context 1, 2, and 3. Are we clear? Okay. So price comes in. This one overnight, it's a maybe. It's in the bottom third, but it's not even 2 to 1 up here. Now this was for me a beautiful trade. Why? Because we had the beautiful shooting star at the top third, right near the previous day's high. Right here, we reject that below R3, and we fade back to the other side. So for me, this was a beautiful trade. And then this one right here. The only thing with this trade that I don't like is this big candle. So that's a problem. I typically will shy away from trades. Great location though. We reject the weekly. We pop back above the previous day's range low for a fake out breakout number 3, but this candle is just too big, so I'm going to pass. So the best trade of the session was right after the open right here. And again, if you understand what context 1, 2, and 3 is, you know exactly what to look for. Our favorite trades are going to be top third, bottom third, fake out breakouts, top and bottom until price can prove above or below. We do not consider any swing trading unless we are obvious bullish above or below the previous day's range. Are we clear? Good. Now let's go look at a few others. Oil. Okay, same thing. I'm going to go look at that weekly chart just quickly before I bring it back down. I just want to see, are there some key levels? And I can see there's some key levels here. And again, these are just decision points that I'm interested in right there. Then I'll go down to the 30 minute. So now I've got the bigger levels in red. Again, we've got our previous days, we've got the weekly, monthly, and I know exactly where we stand. So we've been, bearish, squeeze it up. Again, consolidation, expansion to the downside. Now we're basing. So Are we going to break above? Well, who knows, but we didn't break above the previous day's high. So when you came in, again, now oil starts at 9 o'clock, but again, electronics starts at 8 o'clock. Okay, so again, what was price doing? Again, when you came in, now overnight traders right here, context 2 inside the previous day's range, and context 4, no edge, but look at this beauty right here. You had overnight traders had the fake out breakout, context number 3, fake out breakout, the previous day's range low. Beautiful trade. Now this one also for the overnight traders, you had the break retest of the open and opening range with a pin bar. I like beautiful 2 trades. Now, what were the trades in the kind of 8 a.m. on? Very choppy. You know, not really. When I see stuff like this, no edge. So the US session really had no trades. Overnight traders really had some beauties. Okay. Now, one of the things I also look at during the day, I also want to see the VIX. Now, the VIX, same thing. Now, if the VIX is coming down, typically the market's going up. If the VIX is going up, market's coming down. Now I want to know, is price above or below? Because if the VIX is trending, then that gives us a lot more confluence that the markets in the US will be trending. But when it's inside the previous day's range, when it's neutral, it tells us that the VIX can go both ways, and it also tells us that our trades in our indices can go both ways. Same thing with the dollar. I want to know during the day, where is the dollar? Is it above or below the previous day's range or inside? Well, it was inside, and look what happened. You see how it rotated at the top third, bottom third? So again, if the dollar is going up, not good for bullish markets. If it's coming down, good for bullish markets. So I always keep the VIX and the dollar side by side, my S&P or any other symbol I trade. Are we starting to get the picture here? Okay, let me go show you a few more. Let me show the euro. So the same thing, I'm going to go to my 1 week chart quickly. I just want to see where there's some, noticeable bigger levels. We have a double top here. So I got that. I've got this bottom right here. So again, immediately, these are very key to me. So let's go back to the 30-minute. I've got these red lines in, and again, I've got my previous day's range. I got my weekly levels. I got my monthly, yearly, and I've got these, bigger key levels where we had decision points. All right. So now we come in, you came in. Okay. The euro typically starts the US session at 8:20. Again, electronic session. So we'll start at 8:20 right there, because that's when it starts. Same thing with gold. Right there. Okay, good. So when we came in right here, so same thing. You had context number 2. Context number 2 and context 4. Context 2 inside the previous day's range. Context 4, no edge, no edge to take a trade. So I either wait for context 1, 2, and 3 to set up, or I go to another symbol that has it. So overnight traders had 1 try, 2 try down at the bottom third, right there. Both pin bars, beautiful trade with a stop below here. First target back up, it hit, and then look at that. Look at that beauty right there. You had 1 try, 2 try, fake out breakout where price comes quickly above the previous day's high, fails. Look at that. You had R4 and a weekly above it. So when you have multiple levels around the previous day's highs and lows, that gives you a real edge. You see down here, you had an S4 and a previous day's range low. We call that confluence. Okay. The more levels you have around, the stronger it is. So to me, this was the trade of the session. If you were trading the euro right here, this was it. You look at that beautiful dump. Beautiful. We get that rotation from one side back to the bottom third. You made your money. Okay. Next, let me show you Bitcoin. Actually, let me show you gold, and then I'll show you Bitcoin and maybe some Apple. So again, I'm going to go to gold. I want to see what it's doing right now. We're basically in the consolidation mode. Let me go to the weekly just quickly. Again, what I'm looking here is just, do we have any obvious decision points? And we do. Here. And again, I just want to know where the most recent points where price reversed. Let's go back to our 30-minute. I have our levels in, and there we go. We have our big levels right there. I told you we're in this consolidation. And again, when we're in the consolidation, this is where we pay attention to our previous day's range, our weekly, our monthlies, our yearlies, these other red levels, okay? So now we have those levels in place. We know they're important. Now tell me, when you came in, here was your previous day's range low, high, midpoint. Okay, so look what happened. We're in the middle. Now, when you get these small tight candles, break and retest of the open range S3, I'll take that trade. This is a 2-to-1 trade. I'll go, remember, in the middle, it has to be half size. I have to have at least 2-to-1 to the bottom or top. These small candles gave us the opportunity for a short. Remember, gold opens at 820. Okay, right there, right there. So that was the trade. And then coming into the the US electronic, really, we don't get, we had the break below the previous day's range low, but too big of a candle. I can't trade that. So really the trade of the session was the overnight traders got it. Let me show you two more. Let's go look at Bitcoin so you can see crypto. Now, as I do this, crypto trades all the time, so it's live. So again, what do we see here? Again, remember, price comes in, consolidates, expansion, consolidates, expansion, consolidates, now reverses, comes right back to this area. Okay, so we know this area is important. Let me go to the weekly. Let's just see if we have any big decision points. I'll put in. So I got that. Again, these are just area where price turned quickly. And I'll put in this area right there. So these are just immediate kind of areas, where price, turns. So now I have the 30-minute, I have these bigger levels in, I have the previous day's range, I got the weekly, monthly. So I'm set now. I know exactly where my levels are. Got it to the left. Now I've got my chart here. And when you came in this morning, here's your open range. Here's previous day's high. Here's your open range open. There's your previous day's range low with a monthly right there. And so right here, if you're an intraday trader on Bitcoin, you could have shorted right at the open in the top third, no problem. And then price has basically been in a range right here. And this was the only other trade I like right here. Top third, the shooting star right there. These were your two trades today. Otherwise, we're just in a range and it's kind of just choppy, no edge. Let me show you Apple on, and what I'll do here, let me go to, actually, let's look at one that was, all right, Amazon, there we go. So what I'm going to do is the same thing with Amazon. I'm going to go to the weekly chart just quickly. Let me see if we have any decision points. Also, remember, always be aware of news and earnings. We don't trade into news and earnings. So these are just areas where we had decision points right here. And again, I'm putting them in. So right there. Now let's go back to 15 minutes. It's, again, we don't have overnight action. So I want to have this right here on Amazon. So again, we have our levels. Again, what was Amazon doing? If we squeeze it up, look at it, ready? Expansion, consolidation, expansion, pull back into that consolidation. We expand, and now we're in expansion. And also don't forget your trend lines. When you have your trend lines in, always have them. They act as excellent areas, potential support resistance. So what did price do? Remember, we have our previous day's range. We have our weekly, monthly, yearly highs. Remember this red line? This is one of our big levels right here. Look what price did. So price broke above the previous day's range, made higher highs, higher lows. This was a swing trading day. And if you don't swing trade, you would just day trade it. So let's go look at the smaller chart. Remember, if swing trading is not in your plan, then you just day trade it and flat at the end of the day, you take your setup. So again, when you came in, okay, when you came in here, remember, we just have the US session. So the price came, here was your open, and look at that. That is as good as it gets right here. Look at the left. Do you see how this right here, we gapped up? Remember, when you have a gap, this is a bullish candle. Gap up is a bullish green candle. Gap down is a bearish red candle. Okay, so this right here, what I like to do is, here was your previous day's close. There was your high. Your fib tool matches up right here, whenever I get a 50-62 matching up with a level, okay? And then what I'm looking for, target 1, 23, 50, and then 100% potentially. Okay, that's just an odds enhancer. So again, gap up, pull back 50%. You have an engulfing rejection candle right at the previous day's high. Okay, for me, that was your trade right there. The second trade potentially that you had right here. So let me show you. Again, below structure, there's nothing there. I'm going to go below R4 to give it some space. And this trade gave you 3.78 to 1. The next trade that potentially you could have took was we went from right here, momentum into consolidation. We break above the open. Again, structure, you see left, I have to be below structure. And this trade right here gave you 2.6 to 1. So those were the trades, because again, remember, context one is price above the previous day's range. If it's making clear higher highs, higher lows, we're interested. But the reason why I like this trade is because we gapped up. All this was a pullback within the bullish price action, and we did it at the previous day's high. Okay, and then we hit over 2 to 1 on these trades. And the nice thing also about this, you see right here, 1, 1, 2 right there. So we held that trend line all the way up there. So again, remember, context one is when price is above the previous day's range high, higher highs, higher lows. We'll only consider a swing trade if it's making higher highs, higher lows. And remember, we'll only consider a swing trade if price is above the previous day's range or below if it's trending, okay? And we're looking for those continuations above, pull back to support, or pull back to resistance if we're shorting. Context number 2 is when price again is inside the previous day's range. We're going to be looking at the top third, bottom third. The only way we'll consider the middle is if it's a very wide range. We're going to go half size, but we must have 2 to 1, the top and bottom. But our favorite trades are going to be the top third, bottom third. Context number 3 is when price has the fake out breakout at the previous day's range high or low. And when we have multiple levels around that previous day's high and low, it makes it even stronger. And then context number 4 is when we have no edge. Price is either very high volatility or tight ranges. I showed you several of them, and you basically do nothing. You wait for context 1, 2, and 3 to set up, or you go to another symbol. So what I love about this process, let's wrap it up, is again, when I come in every day, okay, when we come in every day, we've done our homework. Okay, we've done our homework. We look at that 60-minute. I showed you how we break it down. Okay, we look at the 60-minute. So we're clear. I squeeze up the 60-minute. And again, what I'm looking for is, do we have expansion, consolidation, expansion, consolidation? Right now we're in consolidation. I also then always go to the weekly chart. And again, I just want to look at the decision points where price turned around quickly. Then I can go back to my hourly or 30-minute. Or if you're on now futures, Forex, or crypto, I use the 1 hour 30. If I'm using a stock, I'll usually, I'll move from that 1 week down to a 15 because it doesn't have, the overnight action. So then again, once I understand the bigger picture, are we in expansion, consolidation? Where are the bigger levels from the weekly? I also, very important, I want to know after Monday and Tuesday, I will set the high low. Okay. But the most important thing here is honestly is, where is price in relationship to the previous day's range? Is it above or below to tell us whether or not we have a potential swing trade, bullish or bearish, or are we inside the range? Again, context 2, looking at a top third, bottom third trade, or do we have a context 3, fake out, breakout, the previous day's range, high, low? And again, remember, we're using the previous day's range high, the midpoint, the open, the previous day's close, this dotted line. We're using the weekly, monthly, yearly high lows. We're also going to the weekly chart and seeing those decision points, because I want to know, because remember, smart money controls the market. hedge funds, banks, institutions, and daily, weekly, and monthly is where you're going to find those levels. But then once we understand that, I have our 30, 60 minute to guide us. And then we look at where price is in relation to the previous day's range. And then again, are we above or below trending, looking for continuation trades? If we're inside the previous day's range, again, are we at the top third, bottom third, fake out breakouts? Now, the other thing I want you to also remember, what is price doing inside the previous day's range? Is it bullish, bearish, or a range? Well, you've got to be able to identify ranges right here. You can see right here that price is in a range right here. Okay, it's basically equal highs, equal lows. Okay, and with ranges, I typically want to fade above or below or at the edges. Okay, and what it takes is, again, back testing, journaling, following your routines. Back test 50 to 100 trades with this four context situation trading. And again, it's understanding what is context one, what is context two, what is context three, what is context four. It's squeezing up that 60-minute chart to see what is the immediate price action, consolidation, or expansion. I also go to the weekly so I can see if there are some bigger smart money levels that we need to watch. And then once I have that set on my 30 and 60-minute, I come in here, I've got my checklist. Is price in context 1, 2, 3, and 4? And then it's again, if it's in context 1, 2, and 3 context, then I'm looking for my setups. I'm waiting patiently for that A setup. Okay. Now, if there's anything that you did not understand about how we break this down using the 60-minute, the weekly, how we use that anchor chart to, identify, some of the bigger levels, identify if we're in consolidation or expansion. Okay, then hit me up at hello@trade90x.com. Then once you have that, then what we do is now we typically trade the indices, some, oil, some gold, maybe some euro, Apple. We try to keep it simple, no more than 5 or 10 symbols. We run through the symbols in the pre-market. Our pre-market routine is looking through those symbols to find which one of these symbols has the most obvious price action order flow and where is it giving us the best, highest potential setup in that top third, bottom third, or the fake out breakouts of the previous day's high and low. Okay, we come in, we have our routine, pre-market, live markets for execution, and then the post-market is to journal like crazy. What did I do well? Did I follow my process? What do I need work on? How did I manage the trade? What was the setup? Did I follow it? Did I follow my risk management? And then snapshotting it, but by year, month, day, what type of day it was, what was the setup? And the more that you, again, rinse and repeat this process with, again, routines, back testing, journal, the faster you're going to get this context 1, 2, 3, and 4 setups. And I'm telling you, once you understand this context 1, 2, and 3, 4 setups, you're going to come in every day. You're going to be totally the master of your universe. You're going to know exactly what to do because you have a back-tested statistical edge with your numbers. You're going to come in every day, pre-market. You know exactly what your plan is, and then you're going to wait patiently. And then once you really mastered the setups, you're going to know when conditions are optimal. And now remember, you're not going to win every trade, but the beautiful thing is about this: when you start back testing, journaling, and building routines, you'll know when the trade doesn't work out. When you've got it in your area and you've got the setup and it doesn't work out, you'll know quickly that this trade didn't work out. And that's part of trading. But this is why we back test and journal, because the only way to succeed in trading is to know that you have a body of work, that you were able to build a statistical edge, and it's the only way you're going to have a scalable, replicable business that is going to give you the confidence in the psychology that you know what to do. So again, if there's anything that you did not understand about this process, make sure you do 2 things. Make sure you watch our pre-markets every morning videos. Make sure you watch our weekend videos, and email us and send your charts and ask the questions. Again, if you want to get better, you got to ask the questions and be around people that have done it. And I'm telling you right now, this trading strategy, the 4 context and situation strategy, is simplistic. It's easy, and anybody can do it if you put in the work. Okay. With that said, I hope you got some value out of this. Make sure you share this video with people that need it, because this is life-changing and empowering. And again, any questions, don't be shy. Hit us up. be safe, and I look forward to hearing the positive results.